Good morning, everybody. It is absolutely game time. There is absolutely no time to waste on this, but I will thank you for showing up to the Golden Nugget every single week, every single Wednesday at 11:30 Eastern Standard Time. If you don't know what the Golden Nugget is, we will tell you what it is here in just a second. But for all intents and purposes, it is about to be a crazy week, and if the markets pumping and getting that nice bump up earlier this morning don't show you what is actually going to happen this week, I don't know any amount of words that I can, put into this video that can tell you that. But what we're going to do is we're going to show you on the charts. And if you were here last week, you went 5 for 5, 100% win rate. We kept the win rate at 100% yet again. Beautiful, beautiful trades. They all hit. You're in a trade right now, potentially 2 trades right now. And we did miss one really good trade setup, okay? But this is why I urge people to get into the golden opportunity, because I can't give you every single trade every single Wednesday because I can't lay out every single scenario that's going to happen a week later. And this trade would have hit yesterday. And unfortunately, I'm a day late to call it out. But if you were inside of the golden opportunity, you would have known, hey, I'm longing at this point on silver, and you would be up a ridiculous amount of money. So let's get into the Golden Nugget. We're going to do our first segment, which is going to be gauging gold, where we actually go through and do the TA. I'm going to show you the trades that we won on last week, and then I'm going to line up trades for this week. Then we will do that for the silver markets as well. Then we will get into what is called the commodity compass, which tells you everything that is happening inside of the markets right now, which, spoiler alert, it's a lot of crazy stuff. Then we will get into all of the teaching segments where I show you something from inside of the golden opportunity, the training that I've been talking about that I brought out in conjunction with verified investing that teaches you to trade from any level, whether you're in commodities, whether you're in crypto, whether you're in equities, whether you trade options, whether you trade futures, swing traders, day traders, intraday traders, scalpers, whatever it is that you are, this training will absolutely help you level up and teach you how to trade. And it's a skill that no one can take from you once you learn it. So I urge people to get into the golden opportunity. But we will then next, after we do that segment, teach you a little snippet called the Golden Nugget inside of the golden opportunity. What we will do is we'll get into our 2 special segments, and then we will get into the economic calendar and tell you all the things that are going to happen in between now when you're seeing me and next week when you see me yet again for the Golden Nugget at 11:30 Eastern Standard Time. So no time to waste. Let's just gauge gold and let's talk about the trades that we absolutely killed it on last week. So if you give me 1 second, let me zoom in here. If you were watching last week, you know that we had some absolutely killer trades. You know that we were talking about this descending triangle. And if it broke down, you could take a short here, right? But if it breaks up above it, that is an absolutely bullish sign. Okay, this is technically a bearish charting pattern because the more that you bang on this lower end of this support, the more likely it is to break down. But what do we know about gold? Well, when in doubt, zoom out. It is in a massive, massive uptrend, and this is just a kind of consolidation zone as part of a larger consolidation zone. So even though you could break down from this, you're still inside of a very, very key value area, which is this FRVP right here. Now, the first trade that we gave out was this short, which is where you run into the resistance from that descending triangle, okay? Now, what happened? We entered, we exited perfectly at the point of control. Perfect trade, perfect entry, perfect execution, okay? Then we got a nice long bounce from the bottom end of that channel, which was actually right down here, okay? And give me 1 second, it was actually right here. There we go. Okay, perfect. So we got a nice little entry on a long position, and you are absolutely profitable in that right now, and you are still riding that. Now, say you didn't get that, right? We still got this, okay? We still got this, which was the secondary bounce after we fell through it, okay? This was the secondary bounce once we got up above it. This is where you longed after you hit that resistance and kind of, started pumping up. So what were those resistances? Well, I can show you. Okay, so for all intents and purposes, the red lines are going to be your resistances and your green lines are going to be your supports. Okay, so these are the resistances and this is the support. So resistance here, as you can see, that's why our short hit, right? We banged right into those two resistances, boom, fell perfectly down to the point of control. This was, I believe, a 7x risk to reward on this. It was an absolutely insane trade. To anybody that took that, you're an absolute animal. Great job. Then secondarily, here's our bounce, and you got the entry twice. We fell through it, and then we flipped it back to support. We came down under the point of control. You got that entry. If you trailed your stop loss up, you knew to exit at this red line, right? Potentially if we get caught up there. So you got, you know, a nice little trade there. Then you got your secondary entry right here. Give me 1 second. Then you got your secondary entry literally right here or right here, okay? And neither time would you have gotten stopped out, and you would be, again, wildly profitable on this. This is a, 1.6 risk to reward as it sits right now, but obviously you wouldn't have set your stop loss all the way down here. You would have set your stop loss under the green line, which would have given you about a 4x risk to reward ratio. As it sits right now, 3 longs all hit. This did not hit, obviously. This was a break above this line, right? And there was nothing that we could do about that, right? There was nothing that we could do about that. Our trade didn't hit, nothing to see there. We can delete that trade and get it out of here. Now, let's talk about what we are seeing now, because, and this is something I'm going to teach later on in the knowledge bank or the golden nugget section of this, but what I'm also seeing is give me 1 second, get up here. We have a micro falling wedge that we have now broken out of, okay? So now that we have broken out of this, this is where you can come down here and you can have your nice little long right here, right? This is your nice little long. So once you get and you regain this point of control and you regain this falling wedge, right? This is a bullish pattern that is now breaking out. You can enter here, right? You can enter either here at the point of control, or you can enter at a retest of this, right? My bias would be enter at the point of control. Your first target is going to be the 200 moving average, which is right here. Obviously, we just front ran that and we're kind of rejecting from it, but the more that you bang on something, the more likely it is to break down. Obviously, your next take profit is right here at these swing highs, which is going to be 33.70. Again, these are game time decisions. You have to make these decisions to see if it tops out there, similar to back here whenever we longed at that, that kind of downtrend support, and then it topped out right here. That's where you got to know to get out, right? And then secondarily, if you're going to swing fail or you're going to come up here and reject from these highs, that's where you get out of this trade. Obviously, your next profit target is going to be right here at the value area high. And then if you can somehow get through that, you're coming up here to the top end of this parallel channel that we have been watching and trading for a very, very, very long time. Very well respected channel, as you can see. Okay, so that is your long trade as it sits right now. Now, the secondary thing I want to bring up is my trend lines, okay? Because we have a symmetrical triangle that is going to all encompass this bad boy, right? So we have a symmetrical triangle right now, and I'm going to bring up my support lines, my trend lines as well. Now, since we have gotten through this line, okay, this is going to be acting as support. So if you reject here and you come back down here, this is a shortable level, okay? And this, you're only going to short if you get back through this level and then you bearishly back test it, okay? So what do I mean by that? This is exactly what I mean by that. Let me draw it for you. If we come up here, we reject off the 200 moving average, we get back under the point of control, we come back and bearishly back test it and reject, that is where you enter your short, okay? That is where you enter your short, all right? So give me 1 second, and bang. Boom, perfect. All right. Now, we will put this short position inside of the Golden Nuggets trade, and we will say POC, short POC, back test. All right. So that is essentially what I'm seeing right now. Now, if you come up here and you just keep running, once you get above this 200 moving average, that's where you can start thinking about adding to your position. Okay. So you can take this and you can copy and paste this up here. This would be a long add. Okay. Add 200 moving average regain. Okay. Because that's going to be extremely, extremely bullish for gold, okay? Now, the other thing is you got to watch this level right here. This level right here if you break down from this level, again, you are shorting, right? If you break down from this level, and I'm trying to cover as many as I can at this point because, you know, we missed out on a trade last week, which was this right here. And on silver, we missed out on a trade that just hit yesterday because I didn't I didn't think about those scenarios happening a week from now, like the day before we started this, right? So let's say this is going to be a short of the triangle break, okay? So I'm trying to give you all of the trades that you could possibly see, right? Now, secondarily, you get up above this line. This is extremely bullish, and this is where you start thinking about adding at the break, triangle break, okay? So those are your trades as it sits right now. Let's see where this takes us. Obviously, we're in a profitable long as it sits right now. If we break this down, we are in a profitable long as it sits right now. This is a beautiful, beautiful long. And obviously our target's right up here, right? Okay. So again, game time decisions on those key levels. Now watch, watch, watch. Okay. Let's get into what is called the silver snapshot. All right. So let's talk about the trades that absolutely killed it last week right up here. Now, this was a short at the rejection of the value area high and a resistance point. Okay, now what was that resistance point? Well, I'll show you. Give me 1 second. Rising wedge. Okay, and then we basically showed you, hey, if this rising wedge breaks down, you could be coming down here to the value area low. So what happened? It broke down. You came down to the value area low. Perfect entries, perfect exits on both short trades. Now, we did not get our bounce here, so this did not actually happen, okay? We never got our bounce on this. I mean, technically you did. You got your bounce right here, so we went, you know, technically 5, 6 for 6 on this. This did hit, but it did not do it multiple times, right? So you got your perfect entry, your perfect exit on this. So you got 3 trades that hit last week, 3 for 3, right? And then obviously this one never happened, so we can delete that. And then obviously this one never happened either. We never regained the point of control to take a bounce. So, you know, nothing that we could do about that. But this is the trade that we essentially missed last week. And this is why I urge people to get into the golden opportunity. This is the value area low of our range from this, all of this big, big, big move volume, okay? So if you're inside of the golden nugget or inside of the golden opportunity, you know that when that is happening, you are absolutely longing at the value area low. I actually have entire strategies based around just trading these value areas, okay? And so what I want to point out is that what you're also seeing at this level is extremely, extremely oversold on the silver asset, right? So you're seeing all of these trending down, lower price, right? Lower price, and we can delete this off of here so you can see it a little bit better. We can delete this one off of here so you can see it just a little bit better, right? But what are you seeing here, right? You're seeing RSI bottoming out, right? It's bottoming out. You're not getting technical, like bullish divergences, but you're getting very, very close to under 20. And then when you hit under 20, guess where that hit, right? At almost the exact bottom and the value area low. So as you can see, you had a nice little 3-candle pattern that showed you, hey, this could be almost considered. It was almost a tweezer bottom, right? It was almost a tweezer bottom, which is absolutely insane. And then bang, you could have taken that and just rode it into, you know, ridiculous, ridiculous profits. So I wish that I could have given people this trade. Unfortunately, there was nothing I could do because, you know, it hit yesterday. So that's why I'm going through and trying to give you, you know, as much as I possibly can on this now, because at the end of the day, I want you to be successful. But that's why I urge you to get inside of the golden opportunity. Now, secondarily, you got to watch these moving averages because right here, if you get a rejection here, this is short city. It could be short city. Now, just remember, we have the Fed meeting coming up. We have meeting minutes coming out at 2 p.m. today, and then we have the Fed meeting that is coming on Friday. Okay, so you got to watch these moving averages and see how we react. But for all intents and purposes, if we regain these moving averages, right, this is where you can start thinking about longs, okay? this is where you can start thinking about longs and then setting your stop loss out here and targeting that value area high in these previous swing highs, especially if you come up above this, you crack this high, and then you back test the POC or the 200 moving average and you bounce. That is perfect, right? Long POC and 200 MA, right? That is what you're looking at right now in terms of longs for silver. And secondarily, if you come back down here, right, obviously we know this long, right? This long is very, very simple. You're longing it all the way up to the point of control. Again, game time decisions, the 50, the 100, the 200 moving average, the swing highs, the value area high. Those are all going to be places where you need to take notice and understand, like, okay, potentially, right, I might have to get out of my position if it tops out here. Long, value area low, okay, bang. And as you can see, boom, we put that right down here into our folder, okay? Secondarily, if you get a rejection, say you come up here and you get a rejection, right? That is a short scenario, okay? So that is where you can start thinking about shorting once you get a rejection at, and set your stop loss outside of these highs, right? Short rejection of POC, okay? Because I'm telling you, man, this could be, you know, a double or a triple top right here, and you could just come right back down. Now, obviously, the Fed rate decision is going to, you know, give you more insight, or the Fed meeting minutes and the Fed meeting that's coming up is going to give you a lot more insight. But, you know, for all intents and purposes, this is where you would potentially be shorting. Okay. Now, secondarily, let's see if we have anything else. We have what is called a symmetrical triangle. Okay, so you can also short at that symmetrical triangle rejection, right? So let's copy this, paste this in here, and as you can see, rejection at the symmetrical triangle, right? But if you get above that, that's very bullish. Okay, so you got to flip long. You got to flip long. You have to flip long if you get above that. Okay. So let's copy this, paste this up here, long, and as you can see, break of symmetrical triangle. And I'm sorry if this is like very long-winded, but I really just, I want to give you all of the potential scenarios. That way you don't miss out again, right? So long, okay? And then we've got short. We're going to copy and paste this down here, and we're going to drag this one right down here. If you lose the value area and the value area low, short loss of value area low and symmetrical triangle. Similar to how we lost the descending or the ascending triangle last week, right? So it's very simple trades, very, very simple. If you want to, go ahead and just kind of pause, go back, get the trades, put these lines on your chart, and then add alerts, man. Just double click, or not double click, sorry. You got to right click on it, add an alert, bang. And that's how you can tell whenever this is getting broken or whenever it's getting tested. And you can do that on any line. You can do it on, you know, your point of control. You can do it on your moving averages, as you can see, bang and bang. So that is essentially what we are seeing inside of the markets right now from a technical perspective. Okay, so I know that that took a long time. I think it's very, I just, we have to spend time on it. That's what a lot of people show up for. You show up for the braids, right? But you stay for the trades, and our trades are absolutely killing it. So I want to make sure I'm giving you everything. Now, let's get into the commodity compass. Okay, the Jackson Hole, we're going to have jitters that are coming around the Jackson Hole Summit. Okay, and that's where the Fed is actually going to talk, Jerome Powell, right? And they're going to potentially advise on future rate cuts, which we have a 94% chance that we're getting a rate cut in September. So now, gold is pinned near kind of like 3-week lows, but we just caught a bounce off of it. And we have the FOMC meeting minutes that are coming out today at 2 p.m. And then obviously the Jackson Hole Symposium is August 21st through the 23rd, which will be tomorrow through Friday. Okay, now we've got the dollar, which was strengthening a little bit, but when the dollar strengthens, we know that gold goes down. When the dollar weakens, gold goes up. So make sure you're watching these key resistances on gold, not only gold, but also silver, okay? Because there is a resistance, or there's essentially support here at the point of control around $3,338, but your ultimate support is going to be around $3,330 to about $3,316, okay? Now, we also have physical demand, right? Which is rising. Okay. So we'll talk about that here in a couple of these other segments. And then we have our tariff watch. Okay. So ongoing tariff talks are also helping bolster and, can work against gold's price if we reach peaceful resolutions, right? But we're going to talk about that yet again in, the special segments, the special reports that are going to be coming up. Now, I want to get into the knowledge bank, and this is how charting patterns can turn from bearish to bullish. Now, you probably kind of know where I'm going with this if you were watching the TA that just happened where we were giving out the trades and showing you all the trades that we, won on last week and stuff like that. But, for all intents and purposes, this is what we're going to show you, okay? So last week we were seeing, excuse me, we were seeing this descending triangle. Now, it did break down, but what you have to understand is when it broke down and it set this new swing low, all it did was make a symmetrical triangle, right? Which is technically a bullish pattern because we are in an uptrend. Now, if it's a symmetrical triangle like this, the way that you can weight what it's actually doing, if there's no floor and it's just trending up, this is going to tell you, hey, all of this over here, right? This is going to tell you, is this weighted more bullish or is this weighted more bearish? Now, if we were in a downtrend, this would be a more bearish pattern. But since we were in an uptrend and we're consolidating, this is a more bullish pattern. It's leaning more bullish. Call it 70-30, right? 70% bullish, 30% could be bearish. But obviously, you break under this, you go lower. You break above this, you go higher. But what did this micro kind of descending triangle, what did it turn into, right? Well, you can see all it did was once it broke, it turned into a falling wedge, which then in turn made it a much larger bullish pattern. So this is why you have to keep your pulse on the market and watch at every level and see what the reactions are, because now we have a breakout of this ascending triangle and just bang, right? And we came down, we set a new low. Everybody thought that that descending triangle was breaking down. We might be coming down to the value area low. Obviously, we caught a bottom here, got a nice little support, created more supports, 1 touch point, 2 touch points, a kiss, 3 touch points, 1, 2, 3, 4 touch points, and a kiss on the top end. And then boom, we blasted through. And this is now a bullish charting pattern that could be bringing you up here to potentially the value area high. So I say all of this to let people know you have to be watching the markets. And this is stuff that I teach inside of the Golden Opportunity. So if you want things like this and you want to know those pro level tips, I promise you every single one of them are inside of the Golden Opportunity, and I let you get inside of my head. I let you understand what I'm seeing in the markets, when I'm seeing it, and exactly what's going through my head inside of the markets live. And I literally have videos where I'm doing live charting breakdowns and walkthroughs and all of that stuff, just literally narrating what's going through my head whenever I'm walking through the charts, showing you, my strategies, showing you the indicators and things that I use. So, for all intents and purposes, if you want that full education, go over there and grab it at the Golden Opportunity. Okay. And it's the first link in the description down below. Now let's get into our first special report, which is going to be our central bank watch. This is going to be centered a lot around Jackson Hole, as you can probably infer, right? So you could call this the reserve radar, but China is also buying again, okay? And they've got like conviction buyer bid, okay? They've given like a conviction buyer bid, all right? Now, there is record central bank demand in July 2025. Seriously, everyone that is here, you have to pay attention to this. This is what moves the markets. This is literally the name of the game, is understanding what moves the markets. In July of 2025, global central bank net gold purchases climbed to 126 metric tons, okay? The highest monthly total ever recorded. So why was gold trending down, right? When you're seeing these purchases come in, it's showing you that the smart money is accumulating gold at these prices at $3,330. They're accumulating gold near its all-time highs. What does that tell you, right? They're not worried about this little market correction. They know it's going to go much higher, okay? China is aggressively accumulating 28 tons by itself in July, okay? That means the rest of the central banks in the world had less than 100 tons cumulatively, because literally they alone added 28 tons in July, the People's Bank of China, and it added in June 2.18 tons, okay? Which is crazy, raising its reserves to 2,300 tons almost exactly. Now, Bloomberg is also saying that ongoing official sector buying is likely to remain a strong support. So we're seeing a nice little floor here. And so long as, I mean, if I zoom out on this chart, I can kind of tell you, I mean, for all intents and purposes, so long as we don't really go under $3,300 right now, it's ultra bullish, and ultimately 3150 right now. Okay. So we do also have a recent Gold Council report and survey that shows 95% of the central bank respondents expect their gold reserves to increase over the next 12 months. That's 1 year. They're going to continue buying for the next year. This is going to obviously help bolster not only demand, but price moving upwards inside of the gold markets. Now, there's a lot more to this. And again, we go over inside of the golden opportunity. There's only so much I can tell you right here in a 30, 35-minute segment. Now, let's get into the last report segment, and then we will talk about what's happening over the next week. We have tariffs, refineries, and the premiums puzzle, as I would call it. Okay, so there was a surprise tariff shock. Now, in early August, U.S. Customs ruled that 1 kilogram and 100-ounce gold bars, which are like the common ones that are on COMEX, right? That they're actually fulfilling, would not be exempt from tariffs, okay? Triggering a 39% levy on imports from Switzerland. This obviously rattled the bullion trade, which they then kind of pulled back on, right? And said, hey, this is no big deal. Like, we're not going to put tariffs on gold, right? That's what Trump said. Now, gold futures also surged to almost record highs of about $3,478 on that disruption fear, okay? Now, logistics and refining channels actually scrambled as well. And then obviously Swiss refiners, they kind of halted their shipments, okay? Because they were like, what's going on, right? This could wreak havoc on the COMEX. That's what they were warning about, right? Now, shortly after that, obviously President Trump came out and said, hey, this was on Truth Social, that gold is not going to be tariffed, which obviously we saw a nice, it's good for gold, right? For gold imports, but it was bad for gold's price. And that's why you kind of saw this fade. Okay. But we know the central banks are still buying. So, whenever we saw that nice pump from the fear of having a 39% tariff, right? And people were trying to load up on gold, then Trump came out and said, hey, that's not going to happen. Everybody was like, oh, sell the gold, right? We'll try and get it at a better price later. Now, the reason why this matters is because whenever you're seeing, like, this can push regional premiums, and it can also distort price discovery, right? Because that's kind of where we're at right now. We set new all-time highs. We're in price discovery. Technically, we're not in price discovery because we're not above the all-time highs, but we're capitulating. We're kind of trying to find our floor and see if we're going to get a leg up or if we're going to get a nice pullback. So with that being said, that is essentially what I have for you today. I want to talk about the economic calendar and what's going to be happening, because this is, again, it's going to be a crazy week. This is game time, right? So today we have the FOMC meeting minutes at 2 p.m. Make sure you're paying attention for that. This is going to move markets, period. Then on Thursday, which is tomorrow, August 21st, initial jobless claims. That comes out at 8:30. If we get, the jobless claims come in higher than what we initially thought, gold is probably going to go up. If it comes in line or lower than expectations, gold could pull back a little bit, give you a nice entry, right, for your long position. But remember, the last time they came out with the labor market statistics, the last 2 times they've revised the numbers and been like, oops, sorry, we know we came out with good numbers the previous two months, but, or in the previous 2 reports, but, yeah, they weren't as good as we thought, so we're going to revise these numbers. So take those numbers with a grain of salt, because they will absolutely, I'm not saying market manipulation, but they will come out with numbers and then revise them later. Then we have the Philadelphia Fed Index at 8:30 a.m. Then we have the global flash PMIs. Okay, that's at 9:45. Existing home sales is going to happen at 10 a.m. This is a star-studded cast tomorrow, right? Then we have the leading economic index, which is happening at 10 a.m. And then obviously the big boy, right? Jackson Hole Summit begins tomorrow and then, runs through, I believe, Saturday. Then on Friday, August 22nd, we have the flash PMI narrative continuing, because Powell's Jackson Hole speech is expected on Friday the 22nd. Okay, this is going to be volatility, like prime volatility. Okay, so then we have retail sales in Canada and the UK. Is that as pertinent, maybe not as much, but then we have the US new home sales at 10 a.m. This is probably going to be trumped by everything that's happening on Friday is probably going to be trumped by Powell speaking. Okay, then on Tuesday, we obviously have US durable goods orders. That's at 8:30 a.m. And then on Wednesday, you will see me again. So with all that said, we went, what was it, 5 for 5, 6 for 6 on the trades last week. Let's see how many of our trades hit this week. Obviously, I wish I could have given you the long from the value area low last week. That's why I spent so much time on the TA this week. So hopefully that is helpful to you. Hopefully that kind of encourages you to get inside of the golden opportunity and be able to find these trades for yourself, not just rely on me to bring them to you every single week. Even though I love doing it, I want you to get every trade, right? Not just a few of them. So with that being said, thank you all so much for showing up to the legendary Verified Investing YouTube channel, or the Drew Wolfer YouTube channel, or the Verified Investing Twitter, or the Drew Wolfer Twitter, wherever you're watching from. We appreciate you because we would not have a platform without you. So I hope everybody has a wonderful day, and hopefully the markets treat you well and the trades treat you well this week. Have a good day, everyone.
Hey guys, Lawton here with Verified Investing, and today I'm here to talk about Kinesis.money, our sponsor. Thank you to Kinesis for sponsoring us. So Kinesis has this awesome thing called yields, in which you can literally earn gold by just performing different activities on their website and their platform. So the first way that you can earn on Kinesis.money is through their holders yield. So basically what that is if you buy some KAG or KAU from them, which is basically equivalent to gold or silver, they're one-to-one crypto equivalent of gold and silver, you're able to collect money from them, right? A percentage of all of the fees that Kinesis takes over transactions, over buying KAU, KAG, or anything else is distributed to people that hold on to KAG and KAU. So super cool. Now the velocity spending is also really cool. So if you spend KAU or KAG, you're actually going to get a percentage of all the fees. Again, this is of all the fees that Kinesis takes relative to how much you use Kinesis. So this is things from going to the grocery store and buying things on your Kinesis card. This are things like buying KAG, KAU, sending it to someone else. And finally, it's the same thing as trading on their platform, right? If you do any of those things, you qualify for this velocity yield. The next awesome way that you can earn with Kinesis is through the referrers yield. So if you refer any friends, family, you'll get a percentage of all of their transactions in perpetuity, which is super cool. They also have a partner for a program for partners and minters. But what I really want to focus on is this KVT, the most exciting part of Kinesis for me. 20% of all of the shares of all the transaction fees that happen on Kinesis are going to be distributed to holders of the KVT crypto token. There's a limited amount of crypto supply, but that's a really cool way to actually own part of Kinesis. You can get in on the ground level and just hold those tokens and collect a nice return. Thank you so much to Kinesis for sponsoring this video, and go check out their website at Kinesis.money.